Hi guys, it's Noah from Surge Notify here. Today I'm going to give you a strategy, how to execute and the correct risk management to scale a small personal account into thousands and thousands of pounds. Let's dive straight into it. So there's 3 key elements of becoming a profitable and successful trader, and this is what will allow you to have the skill set to scale your personal account. That is the core element first, having that strategy on lock. So what I'm going to show you first, I'm going to show you through the strategy that you can use from this video to then go away and trade and grow your personal account. Then after that, after I've gone through the strategy and then I've gone through the execution, I'm also going to talk to you a little bit about risk management on how you can scale at a very fast rate. What I'm going to be showing you the strategy on is euro dollar, a very popular pair that's traded, and it's a good pair because the spreads on most regulated brokers are raw spreads. So if you look at IC markets, FXMC, they're all very little, very much 0-0 spread. And we're going to be starting this trading strategy off on the weekly time frame, and I'm just going to use the last month to talk to you about this. You're only going to be trading 2 or 3 times a month, potentially 4, but nothing too crazy. And what we're going to mark out first on our little back testing session where I can show you this strategy and then you can apply it into the markets moving forward is marking out previous weekly highs and previous weekly lows that get swept. As you can see, we had quite a lot of sweeps. I believe this was also a sweep here as well. And then once we've marked these out, we're just going to drop straight down onto the daily time frame. And what we're looking for in this example is we are looking for Monday to be the day that takes out previous weekly high or low. And very simply, you can already see here, previous weekly high swept by this Monday. So we will be trading this Monday here, and we can remove the previous weekly high. Again, this was Monday here. Strategy looks like it didn't pay off in this situation here. And then also we have it in here. As you can already see, we have 3 tradable days. Monday is the day that we look at to sweep a previous weekly high or low. And then from there, we go down to lower time frames and we pick out our entry model. So first things first, what we're going to do now is we're going to mark out Monday's low and Monday's high on those weeks where we swept the previous weekly low and high. So we've got it here and then we've got it here. And then we also have it occur just here. I believe that sweeps the low. Yeah, it does. And just here. Right, so now what I'm going to do is I'm going to go down onto the hourly time frame and we're going to break this down further. First things I'm going to do, as you can see, we have Monday here and we have the low and we have the high. And what I'm going to do, I'm going to grab my Fibonacci tool with the 50% marked out. And this 50% level is key because this is where we're going to be setting our first partial targets and taking our first bits of profit. So what we can see here, we come down and we sweep Monday's low at 8 AM. And what I'd like to take from this is dropping down further onto the 30-minute time frame. Now we're on here. I'm going to go even lower actually. I'm going to drop down onto the 15-minute time frame and then we can really break it down from here. All I'm looking for is just to come down, sweep the low and then flip. You can use an inverse fair value gap. You can use an order block. You can use whatever you like. In this example, I'm going to show you an inverse fair value gap. Simple as this. Come down, sweep the low, close above the inverse fair value gap, and in this situation I'll then set a limit on that inverse fair value gap, stop loss at the low, and our first target is going to be here. So it's 1 to 4.5, and then our second target we can take very easy on the hourly time frame. We can look at taking profits from swing high positions. So we can have TP2 here, and then there's another swing high here for TP3. So we have TP1 at 50%, TP2 at this swing high, and then TP3 at this swing high here. And as you can see, this would return you a risk to reward of 2.73. Very nice. So our final target would also be up here, but as you can see, we didn't make it. So we close off out here, and then we could have set our stop loss to break even, and we would have come back down and been stopped out on our last remainder of the position. So that's our first entry model there. Obviously, we have this here again. On this Monday, I would skip this here purely because you want to incorporate time and price into a strategy. We swept the swing low during 8 AM New York time. This is prime in the New York kill zone, right? However, here we swept it at 6 PM. This is outside of every kill zone. So this week we would skip the trade. Simple as that. Now coming down into this week here, And as you can see, we completed the full model here. So we had Monday's high and low, we came down into Thursday, and as you can see from Thursday, once again, we swept it at 8 a.m. Remember that timing, 8 a.m. New York time. We have our Fibonacci level for 50%, and all we're going to do, very simply, is we're going to go down to a lower time frame. So again, we can go down onto the 30-minute, or we can also go down onto the 15-minute and see what we're working with. Okay, so what am I seeing here? We've got a big fair value gap here, which we do eventually flip, but the RR is not the best. However, what we do have is we have a breaker block on the 15-minute, which we can very happily use as our entry point. As you can see, we push up, push past it, and then come back and tap into it, where we could have taken our trade, stop loss at the bottom of the breaker. And as you can see, if we had take profit 1 at 50%, that is already returning us a 1 to 4 RR. And then, as I said earlier, we can look onto our hourly time frame, the swing highs that we can also take partial profits on. So we could take partial profits here, partial profits here, and then obviously our full target, which would be for a 1 to 9 at the top. Here a 1 to 7, and then here a 1 to 5. And obviously we had our first target at a 1 to 4. So as you can see, trading this strategy can return you a huge amount of RR. However, you're not going to be trading too much in the month. And this is the thing, this is a one shot, one kill strategy. Now I've spoken and shown you this strategy, I'm going to talk to you about risk management, which is the exact way that you can grow a small personal account. I'll come up into here and I'll just talk you through what I would recommend. First things first, I think that everyone should at least start with around $1,000, £1,000. It doesn't matter what currency. If you don't have this, trading is not for you, right? You should go out, work, save up some money, and then you can go and enter into the trading scene. So let's say we're starting with this. We'll use pounds just because that's what I'm familiar with, and then we can run through this. You've got £1,000 and you want to grow this account. Let's take our trade that we had earlier, which we had for a 1 to 9 RR. And then we also had the other one for around, it was a 1 to 4 RR, wasn't it? With this here, obviously we took partial profits. I'd say after taking partials, we'd probably end up with around a 1 to 6. And once again, this would probably come out to around a 1 to 2 or so, because obviously we hit stop loss at break even eventually. So this is likely what you would realize from those trades. And this is what I'd like to show you in terms of compounding. So when you have only £1,000 to your name, your goal is, if you want to take trading full time, you want to run high risk, right? It's high risk, high reward in this industry. You don't want to go too much where you over leverage, where you're risking 20-30% per trade. But if you're wanting to grow at a fast rate, 10% per trade will happily make you enough money to do so. So if we look at this 10% per trade, right, off of this trade here this month, we would have made £600. And then what we're doing is this would leave our account balance at £1,600. We are now, for this trade here, using 10% of 1,600. So instead of putting £100 into the trade, we are £160 into the trade, which will return us £320, which will put our account balance on £1,920. So in the space of the month, we have returned 92% on our starting amount that we put in, just off of those two trades, right? One thing I would like to make clear to you is that with this style of trading, you can end up taking a losing streak, right? Or being in the situation where the trades don't play out how you want them to, or you have poor risk management in terms of you end up going into the 20 or 30% risk. Please do understand that this is high risk, high reward, right? Once you get to a number you're comfortable with, like for example, what I did was I ran high risk up into 5 figures, such as this, and then I dropped it to 5%. I'm not trading this strategy. This is a great strategy you can go and trade. I'm trading my own, which is similar but a bit different, right? And I'm able to return myself anywhere from 5 to 10 RR a month in profitable months, right? And on 5%, that is very, very comfortable for me. What I've also done from all of the data, which is what you should go away and do if you want to apply this strategy into the markets, is figure out what your longest losing streak will be. So for example, let's say one time last year there was, poor market conditions. There was a lot of consolidation. We didn't see the dollar move too much in the markets. And what you could have found is that the strategy was not as profitable then. And you had had maybe 6 or 7 losing trades in a row, right? The one thing about this, right, is when you're on 10% risk, you can go down 60/70%. You do not want to be in this situation, which is why it can be great at the start if this is money that you are willing to lose. But eventually what you'd like to do is reduce the risk, where if you take 6 or 7 losses, which is very common, this is extremely common in trading for whatever strategy, and you're on 5% risk, you're going to be down 30/35%. And this is likely going to be a number you can deal with, okay? Because in the scenario that, you scaled your account up to maybe £10,000, right? Could you imagine the emotions that you would have when trading and how your psychology will change if you go from 1,000 to 10,000 and then you go down to, £3,000/4,000 again? Your head's going to be scrambled. You're going to be trying to, revenge trade. You're going to be in a bad state of mind. Whereas if you go from the 10,000 back down to only, 7,000 or 6,500/7,000, you're still on a very large sum of money, and enough money to, after it, if you hit a winning streak of 2 or 3 trades, you'll be happily positive. So all it boils down to is your psychology and how much risk you are willing to take on, right? I'd say to grow really early on, absolutely. But if you want to start a personal account and you want to put in maybe £10,000 into that and you're a bit more established, then 100% look at doing 5% risk or so. And these gains are going to compound. ChatGPT is great. You can use that to compound trades for you and work out calculations. But understand that it's a long-term game, right? As amazing as this can be, we have a 92% ROI in the month. I would just like to mention that take your time with it, right? Don't feel like you need to rush and try and achieve gains like this every month, because it's not going to happen, right? The market is going to force you to give money back eventually through it going against you. But I hope you've enjoyed this video. I hope you go away and study the strategy that I've showed you. You can put your own twists on it and see how you end up with it. Thank you very much for watching, and I hope to see you in the next one.